Hello and welcome to Finextra TV's Thought Leadership Series. I'm Hannah Wallace and today we're going to be covering the next step in payments, and kindly joining us on the line to help us understand digital transformation and how financial institutions' priorities have changed since the recent pandemic is David Chance, Vice President, Strategy and Innovation for Fiserv. Hi David, welcome.
Good morning, it's nice to be here.
Good morning to you. Now, this interview comes at a really interesting time, doesn't it? Because at the beginning of 2020, most financial institutions were already on their digital transformation journey. But of course, COVID-19 hit, and we've now seen maybe a bit of a shift in payments modernization programs. So can you start off there and tell us how you think they've been affected and influenced by COVID?
Yeah, certainly. I mean, we started last year and coming into this year seeing a lot of consolidation in the payments industry. Obviously, at Fiserv with our acquisition of First Data, FIS with WorldPay, and even recently with SIA's announcement this week. So we're still seeing that consolidation. I think we're seeing the speed of that consolidation increasing. And I think that's really as we've seen some of the big tech giants really starting to consolidate their position in the financial environment.
Could you highlight for us some of those trends and innovations you're seeing in the payment space today?
Yeah, I think, we do need to understand that rate of change. It's not something that's just happened this year. We've seen it over the last couple of years. We're all used to using credit cards. That's a payment instrument which is over 50 years old now. We saw the introduction in Europe of the SEPA credit transfers about 13 years ago. It's interesting, we're now using the term SEPA credit transfer legacy. It's a legacy payment type. We're all moving rapidly into that instant environment. And I think, I keep saying it's probably one of the most misnamed payment type because we use the word instant. I think what's just as important is the fact that it's available 24 hours a day, 7 days a week. There's finality. Once that transaction has happened in those couple of seconds, you know full well that it has been completed, that the funds will be available. And I think the third part of it is the enriched message set. We've talked a lot about data, and I keep saying data as an item is absolutely useless unless you understand the context in which that data was generated. I could just, grab hold of an account number or an amount, they're data elements, but understanding that actually that was me standing at a point of sale, buying these goods, making a payment, half on credit, half out of a funded account, and leaving the store at this time of night, has huge amounts of information around it that we can then use as a commodity, whether it's in an individual set of information or consolidated. So I think that rate of change, we're now seeing the speed of new payment instruments really coming to the fore, and the regulations around that. We all talk about agile development, and we've seen, over the last 4 or 5 years, a lot of the development coming through and being created in an agile environment. We need to remember that the university students coming out of university and going into the regulators were born into that type of thought mechanism. They process in an agile way. So it's not just developing code, it's developing regulations, developing the support going forward. We will see, the likes of the PSD. First one was about 25 years, second PSD 2, 7 years. I think we'll see another one in 3 years. The next one will be in 12 months. The next one will be in sort of 3 months. Very small focus, but actually having a big impact on what we're doing. So I think that rate of change is incredible. And I think that's where we're getting a lot of the difficult conversations at the moment in, well, how do I achieve that? Can I adapt my legacy systems to actually cope with that type of speed of change? We talk about processing instant payments in thousandths of a second. So I have a thousandth of a second, a few thousandths of a second to do a full fraud check, to do a full sanctions check, to do a full money laundering check, to do a full terrorist financing check. Those sort of things we used to spend, hours on. We're now doing in thousandths of a second. We're processing. We've got finality in a few seconds. That money has physically moved. I need to make some liquidity decisions on that. Is my, a legacy system capable of supporting that? And that's before we've even moved in to talk to sort of the overlay services, the fun things that sit on top of the payment system itself and actually makes it useful to all of the users of the payment systems.
And of course, we wouldn't be able to do any of this. It wouldn't be possible without the much needed technology and the right technology at that. Do you think financial institutions have got the right technology to respond to these market opportunities today?
Yeah, I do think we're in the transition period. I mean, when I've talked a lot around agility, and it's not just agility in being able to support an instant payment, or in Europe support, domestic instant and pan-European tips instant, or, in the US, do I go TCH or do I go Fed now? It's more about understanding that the payment is just part of the flow itself. My fraud, my risk engines have to be 24/7 and operate in that sort of sub-second environment. My core banking system, my ledgers have to be available to do that. I sort of fall down the trap myself. I talk about intraday liquidity. Well, in a 24-hour system, what's a day? I am constantly managing and understanding my cash flow, my liquidity positions in a 24-hour environment. And we've still got, banks and central banks talking about start of day, end of day, calculating a balance at the end of the day. Well, I no longer have a day. It's always on. And that sort of agile environment, to be able to cope with those regulations is key. To be able to optimize the spend, where is the best area of the systems to spend on? What is core to my business? What could I actually outsource or partner with a provider to actually augment how I spend and actually improve the service, looking at where my value is in that ecosystem. So, traditionally banks thought that they had to be touching every point of the touch point with the customers. I think, as Amazon and Apple are sharing and Google, there are parts that they can play and parts where they can partnership with, Apple, say, working with the banks, Amazon working very closely with its banks, PayPal working with the likes of Visa. It's a partnership. And I think that's where we need to get to, because it's tied into, actually, it's the point at which you normalize the data and add the context to it to drive innovation. So it's the point where all of the sort of the request messages, the notification messages, the query messages, the overlay services are all sort of processed and orchestrated from that central point to drive the actual underlying movement of funds. So, is payments the right term? I had no idea, but it has to orchestrate those, wonderful overlay services. The request to pay and the response with a guaranteed payment, but on this date. I'm now processing, well, is that an instant payment or is it a future dated payment? Because it's been requested and guaranteed now, but it's not actually going to get processed until the goods are delivered on Monday. And it's really, how do I then pull in things like identification into that? How do I bring in some of the loan and the credit environment into that? We talked a little earlier about credit cards are a mechanism that are 50 years old. They are ripe for change in terms of how we manage that credit environment. We're looking at the personal management systems. The phones that we carry around have more processing power than ever before.
So that's where I was heading next. You've sort of answered the what half of my question there. Now I want to talk a bit more about the how, and how financial institutions should use that technology to respond then? What should they be doing?
And really looking at how they optimize their spend. How do they process both the payment messages and the supporting overlay services in an efficient way? We look at some of these request to pay environments, and they allow the request to pay to come in and on a separate rail to the payment. So I may get a request to pay and create an instant payment. I may get a request to pay, create a future dated payment. So really it's how do I pull all of that together and process it from one place. So really optimize that, normalize the data that's supporting that in a environment which is 24/7 by 365, and then look at how do I actually want to deploy that to drive those business benefits. Do I want to put that on a data center that I own? I'll manage it both from a technical and an operational perspective. Do I want to optimize that? We talked a lot over the last few months about business continuity and how can I quickly move my business process, and that's where the likes of cloud really come into the top of the discussion in terms of I'm still responsible for managing it, I'm still responsible for the technical side of it. I've talked all the way through this of rapid change, the need to have an agile approach to this. It's not just a technology agile approach, it's a business agile approach. And it may be that, yes, I have to provide payment capability to my customers as a financial institution, but it's not my core business. So do I then partner with an organization like Fiserv as a sort of a payment as a service environment? And each organization will be slightly different in their approach. And it may be that even within an organization, it's a segment approach. The retail segment may be something that we could look to outsource, to partner with a service provider, whereas the business to business environment, which is more focused on the factoring, the credit, the cash flow, where the FX, where we're actually making the revenue rather than on the actual payment element, is something that that partnership with the corporate brings real benefits, and so we'll keep that part of the business either on a sort of cloud platform or actually in-house. So it's really understanding the business, understanding the segments, understanding what those user needs are, and talking to the specialists in the market that can help in those discussions.
Sure. So I think another way of putting the question would have been, what sort of business strategies should organizations be looking to? And the key word that's come out of that is partnerships and agility, scalability and speed. But David, we'll leave it there for now. Thank you so much for sharing your insights. It's been extremely informative and you've really painted the picture for us today. So thank you very much.
Thank you.